Hey, everybody. Welcome back to another episode of the Blockware Intelligence Podcast. This week, I have a very, very special guest, Sam Trabucco, CEO of Alameda Research. How you doing, Sam?
Hey, I'm good. How are you?
Doing well, man. Can't complain. Did you have a good Thanksgiving?
Yeah, I was, I mean, not really one to celebrate Thanksgiving in particular, so I was just working. But yeah, it was
Gotcha.
Good, all things considered.
Nice. I think we could first start. I'm sure everyone wants to kind of get your thoughts on what's happened over the last kind of 24 hours. So if you want to kind of walk us through what your kind of thought process has been.
Yeah, sure. So I think it's a fairly simple thing. Like, like the equity markets, or specifically U.S. equity markets, like global equity markets, have like sort of all crashed overnight and like into the morning U.S. time. They crashed like a few percent or whatever off the back of what people think is off the back of the news of the new COVID variant being like worse than some of the other ones, or like people or governments reacting pretty strongly to it. And yeah, so like that's what fueled the equity market crash. And if you remember, like this is exactly what fueled the giant crypto crash in March 2020. I'm not like expecting that to have something of that magnitude to happen, but we have seen that the crypto markets have some potential to like move in the same direction, but a little bit more, like with a higher than one beta to these equity markets. And yeah, that happens for like a few reasons. Like specifically, like we were once again, this was a crash into holiday liquidity or something like that, where potentially some like institutions or whatever who might have been around to bid Bitcoin or crypto or like anything weren't around, and so maybe there's some potential for like any organic move like this to get exacerbated. Crypto also has some like market structure features which make it more likely to have large moves than small ones, especially if there's like an organic reason for it, like COVID. Crypto has had very high leverage. It's gotten a lot less high on average over the past year or whatever, since exchanges have started reducing their max leverage they allow positions to be from like 100x to 20x and like or whatever. But it still exists, and like so people still get liquidated when there's a biggish move, and like a 10% move over 24 hours, like it basically did get back to 60K now, and then it got back to 54. That is big enough to trigger some liquidations. So yeah, I think that's in a nutshell. That's what happened. Like COVID triggering equity sell off triggering Bitcoin sell off, and Bitcoin has these structural features that allow it to sort of overperform moves, and or have moves that sort of like get multiplied by something more than one. Yeah, so I think that's roughly what happened. I don't think it's especially concerning, as we've seen. Like the markets have a tendency to overreact to news. Even the equity markets have had a tendency to overreact to COVID-related news over the past year and a half, and so I'm not saying that the sell-off is done. It might maybe the U.S. is gonna like announce some sweeping COVID policies over the next couple days, in which case I would expect it to sell off more. But like at some point, like I think the markets are going to stop reacting in this kind of way. But yeah, we'll see if that's now or in a month or whatever.
Sure. Do you think we've seen enough kind of OI flush or enough liquidations? Because it seems like funding, I mean, it's kind of come down a bit, but it really isn't. We haven't seen funding like in an aggregated level kind of flip negative. So like, do you think that's the case? Have we already kind of reached that kind of capacity for you to think we're kind of bottoming out? And B, is that something where you always think we have to kind of have funding flip negative or this drastic amount of liquidations to say, okay, the market's probably bottoming out?
Yeah, I mean, like, so this kind of environment has shifted pretty dramatically over the past, I'd say like something like year and a half or 2 years or so, where like before Bitcoin had gotten above 20K, like this is like winter 2019 or like December 2019. There were like so many short positions that had the potential to be liquidated that never could have before. And it really matters that like when we're talking about like, potential for liquidations and like whether open interest matters in terms of predicting liquidations. It really matters whether we're at like a local maximum or local minimum. This is because like, all right, let's say let's say that even like, right now versus the first time Bitcoin got to 60K. The first time it got to 60K, like there were like, all these new long positions that could get liquidated on the way down. And like, it really did like sharply revert down back to like, around 30 after it first reached that especially high point. The second time it got back up to 60, like, that's like much less likely now because like, all the longs that were open between 30 and 60 on the first time up were able to get liquidated on the way down. But like the second time it got to 60, if there was a small drawdown, like those had already been liquidated, I guess. And yeah, so like even if the open interest numbers themselves aren't super different, it really matters when they got created and like at what prices, and in particular where we are, like what price we're at relative to those prices. And so since we like sort of like literally just climbed from 50 to 60, like, a few weeks ago, I think that there's not a ton of open interest right now that like is especially prone to getting liquidated from a move like 60 to 55. If it gets back down to something below where it's been in the past couple months, then like, it's a different conversation, which like, it might if there's more bad COVID news. But right now, I think that this is the biggest consideration. And yeah, there's not like in the really immediate future, there's nothing specific to expect.
Sure. So like earlier this year, we had prolonged high funding for like whatever 2 or 3 months when we had some occasional kind of moves down. But how do you kind of separate from saying, okay, well, we have high funding, prices grinding down that usually kind of results in some kind of liquidation event versus understanding when the spot bid is actually kind of supporting that? What kind of things do you look at to say, okay, well, the spot bid's kind of bailing these leverage apes out?
Yeah. So yeah, the main thing that funding indicates to me, especially like, like really high funding in one direction, it tells me that like the price move is like largely being driven by like a net disparity in buying and selling in specifically derivatives. And yeah, like you said, that can like if the price is moving one direction, like let's say up like for a prolonged period during which I'm like quite confident that was being driven by like very aggressive people in the markets, in the derivative markets, because like when funding is really high, that really just indicates that someone's doing something very price insensitively in one direction, because like you could be like doing much better price wise if you were not using that product, but you're still choosing to anyway. That means that you're that means that you're like you care more about how much leverage you can get than about your price. Which means that you're A, being really aggressive, B, prone to getting liquidated if your position moves against you at all. And so, yeah, I do think that, yeah, like during periods when funding is much higher, it just tells you that like if there's a drawdown, the drawdown will be big, or it could be big, not will be. And yeah, that's the biggest thing. It's not even that like people putting on positions with derivatives are like, like have less conviction, or like it's a less like the move is less likely to be sustained. I don't think that there's any real difference in probability of like the move getting like reverted, like partially reverted after like it's being driven by derivatives and versus spot. But I do think that like if it does revert back somewhat, it will revert back more on average. And so yeah, I think that yeah, I think that's the gist of what I think there. Yeah, when funding is like closer to zero, then the moves can still be like pretty driven by derivatives trading, but it just will be like lower leverage derivative trading and less price insensitive, which can sometimes mean like smarter or something, but like that doesn't really matter in terms of impact.
Got it. And aside from funding, what things do you usually look at to kind of gauge how much leverage there perhaps is in the system? I guess aside from funding and open interest.
I mean, those are the big ones. Like something that Alameda does also, like we have, like pretty short term or short time scale trading, like all the time. It's all automated, and like a big part of how our models work is trying to determine like where like which markets have moves that matter the most in terms of predicting what the other markets are going to do. So like what I mean by that is like let's say that let's pretend that there are only like 3 exchanges in the universe. We'll use Binance, FTX, and Coinbase as the 3 exchanges. Like maybe it's the case that every time Bitcoin ticks up on Binance, it will always tick up on the other two in the next 100 milliseconds. But let's say that if it ticks up on Coinbase, it will only go up. It'll only tick up on the other two like 10% of the time. And that sort of just means that Binance is more informative of price moves than the other markets. Those numbers aren't right, but this is like the kind of thing that we're trying to track all the time. And in aggregate, if an exchange tends to be the most informative for a given product, it tends to be the case that tracking things like open interest and funding and the premium of the derivative to the rest of the market can matter a lot even long term, just because the most important markets just sort of tend to stay the most important on other timescales as well. So that's something that we track. But yeah, the gist is still open interest, funding and maybe more importantly, premium at a given time. Funding is kind of just an average of the premium of the perpetual to spot over the funding period, but we're tracking it much more granularly. We always know the premium of everything. But yeah, so those are the most important things to us too. And yeah, things have evolved to the point where this is not as so much the most important thing as it used to be. It's honestly gotten a lot harder to predict these medium timescale moves, I think, because liquidations have gotten a lot less rampant since various things about the markets have changed. But yeah, they still matter a lot.
Sure. Do you also look at kind of in a bit more granularity open interest in terms of stablecoin margin versus crypto margin? One kind of broader market structure thing that I've been looking at is just the portion of open interest that's currently margined with crypto versus stable coins, and kind of the decreased amount of potential convexity that we have, if we were to start having some kind of major drawdown. Do you look at that as well? Will you perhaps say, okay, well, funding is rising as well, we also have crypto margin open interest, so that kind of adds to our likelihood of a potential drawdown?
Yeah, I mean, in theory that can matter. I haven't found it to matter a ton in practice, but the sample size is pretty small, so it's not like I'm confident about that or anything.
Gotcha.
Yeah.
And what do you think about different correlations to kind of legacy markets? I think in specific, the one that always comes up is just the Dixie as well as the S&P.
Yeah. So yeah, this is interesting because yeah, it's evolved a lot in the past year and a half, kind of like everything in the crypto markets has. Yeah, pre-March 2020, it was actually kind of unclear what was to what extent should crypto have a beta to the traditional markets. If there's a big move in the traditional markets, what's going to happen to crypto? I remember reading articles back from before this all happened, sort of speculating if there's a big crash in the traditional markets, maybe crypto is going to act as a flight to safety asset. Maybe it's going to massively outperform the traditional markets. Obviously that's not what happened, and I think I think that's sort of the predictable thing anyway. In a global pandemic, when people are super risk off in the equity markets, people aren't immediately racing to put their money into magic internet coins, as at least some people derisively view them. Yeah, and so we've sort of seen as the equity markets have recovered and done quite well, they've crypto sort of again out went in the same direction, but more. And yeah, I basically think that is what's going to happen going forward to some extent, especially as crypto becomes more accepted by these traditional institutions that have risk books that they are maintaining, and that that's the kind of thing that sort of even kind of forces crypto to have a beta to the markets. And yeah, I basically think it's going to keep happening, and the market sort of has spoken, I guess, on this, and it's unlikely to reverse its opinion, I guess. And that's exactly what we saw in the past day.
Do you guys look at any kind of price structure things? I imagine you probably don't, but do you guys draw, price levels or chart patterns and these kinds of things? Or is it more just quantitative, just looking at these different kind of metrics around derivatives and stuff?
Yeah, it's all pretty quantitative. I mean, there's some some like, I don't know, like more intuition based things where we'll like, have some idea of like how the market's going to react to some like idiosyncratic thing going on. But because that can never really be especially quantitative. Like the first time, like, Elon Musk starts tweeting about Doge, like how do you like, you can't build a model about that. Like you're just kind of guessing about what's going to happen. But yeah, for the most part, when we're like, doing trades that are like, based on some level on what's happened in the past, we're gonna try and be pretty quantitative about it.
Sure.
Like
Like,
running a study instead of like, like, I mean, strictly speaking, when people are like, making charts and like drawing lines on them, that's kind of like a study. But we have some methods we found to be better.
gotcha. And like speaking of intuition, I imagine, you kind of have to keep your finger on the pulse to keep that intuition strong. What have been like kind of the biggest changes in overall market structure that you've seen kind of evolve since when you first got into, Bitcoin and crypto overall versus where we are now?
Yeah. So yeah, there's some big changes that have happened. I first started like sort of looking into crypto in summer of 2017. Not like especially rigorously or anything, but the kinds of trades that were possible back then were just kind of this wild. Like the thing that really hooked me into like, oh, I should really be looking into crypto is at the time, I guess Coinbase and Bitfinex were two of the bigger US spot exchanges. And I was just kind of looking at their prices one day and was like, huh, they're like a percent, like Bitcoin's like a percent apart for like real size on this. That must be a data error. And then I like didn't pursue it for a bit because I was like super confident it was a data error. But I tried to like, a few weeks later, I was like it's worth a shot. Like it's not possible I'm the only one seeing this. But like, maybe. So I tried to buy on the cheap one and sell on the rich one, and it just kind of worked like instantly. And I was like, huh, like that's that's kind of stupid. And yeah, so like these kinds of arts were just like, kind of everywhere back then. And yeah, that's something that's been eroded away as more, like more smart firms, like smart money have entered the space. Like, built automated systems to sort of not allow that to persist for as long as it used to be able to. And so yeah, that's like one class of changes that have happened. Like these sophisticated firms with automated strategies have sort of changed the landscape of what's possible and also driven down latency quite a bit. Like you used to be able to like do trades on or like only be doing trades in like a 15-second time scale or whatever. Like you'd be able to like run an algorithm every 15 seconds and like, like actually do well with it, but like execute arbs like that didn't care if you did one leg 15 seconds after the second one. Like you were just going to win on average. That's not true anymore. It's sub 1 second now. So that's one class of things. Another class of things I think is exchanges and other platforms have changed quite a bit. Like everyone remembers the 2018 handling of the BCH fork, where like futures that were going to expire after the fork, like ended up reaching OKX's price limits to the point where like, people who like were able to get really short the futures and like lock in a really good profit. But then OKX like settled the futures early. That's the kind of thing where there's like a lot more trust in exchanges now than there used to be, because like incidents like that just would never happen these days. And yeah, exchanges are kind of like, like there's not like much like, regulation of the crypto exchanges as of yet, especially the ones outside the US. But they sort of are like self-regulating, I guess, to the point where like there's just so many more norms that like traders can expect will be followed by the platforms. Like money doesn't get locked up or like hacked or whatever nearly as often as it used to. And yeah, I think crypto has just like gotten a lot more legitimate in a few ways like this that are sort of exemplified by the way exchanges operate internally. Yeah, I think those are the two big ones, or the two big classes of things that come to mind. But yeah, crypto is like, evolved quite a bit. It's getting a lot more like mature, I guess, and more reliable.
Sure. And like on kind of a similar note, do you think the options market growing is kind of a signature of that? I remember, I think it was with Kobe and Ledger, you did a podcast, if I'm not mistaken, and you basically kind of said that you don't think the options market has a significant impact on the overall Bitcoin market yet. but it is growing. Do you think as we see that grow, that'll just be a sign of the market maturing and kind of the institutionalization, if you will, of Bitcoin? And then also, do
Yeah,
you have kind of like a mental, not necessarily timeline, but kind of framework as far as like how you kind of see that process kind of taking place?
sure. Yeah, so I definitely think that like as the market continues to mature, yeah, options will just like sort of naturally become a bigger piece of things. That's the same thing that happened with futures. Like in 2017, there were not very many platforms that were offering futures, and like the volume for the ratio between the volume of futures to the ratio to the volume of spot was like a lot closer, a lot lower. Futures have become a lot bigger part of the ecosystem, and that's the exact same thing that happened in the equities markets. And yeah, I expect that options will sort of rise to fill a similar role to what they fill in equities over time. I still don't think that they are like a very big part of the picture that matters. Like every like when there's a big options expiration or like a big options expiration, it like you see like a very outsized amount of chatter on Twitter about like, oh, like this is like causing these price moves or whatever. It never is. Like crypto options just do not have the open interest to matter in the crypto markets just yet, especially relative to like the impact that like every funding cycle has in every perpetuals market. Just like it dwarfs the options. But yeah, over time it will like almost certainly become a much more important part of it. Like options expirations in equities markets do matter a lot, and like the big like important options positions like have real impact, and that will happen in crypto too. But yeah, it hasn't yet.
Gotcha. And as far as like at Alameda, when you guys are making decisions, how do you kind of divvy up the kind of weight that each person makes to a decision, as well as like I know you kind of identify as kind of a quick thinker, right? You're able to
Mhm.
make these fast decisions versus I'm sure you have people on the team that are a bit more, slow thinkers, kind of
Mhm.
methodical thinkers. And that's like personally how I would kind of identify myself. How do you kind of like intertwine the two of those to come to the best, possible decision?
Yeah, so in general, we try and be like pretty like agnostic of like who you are when we're like trying to make important decisions. We basically just like try and have like a good idea of what everyone's skills are, like what everyone's like knowledge about a given situation is, and yeah, like if I think that someone else is like more informed of a certain situation than I am, then I'm just like willing to defer to them like 100%. Or if I think that they're like better for like if I would expect that their decision would be better than mine on average, I just like the weight will be 100-0. Like I don't really care about my opinion, even if I don't only barely think that someone else is better suited for something than I am. We had something recently where a trader who's only worked here for a few months like strongly disagreed with me about how we should handle the OMG boba fork, and but he was like much more in tune with like what the community was talking about like with this fork. He had like done a lot more research than I had about like the exact dynamics of how the fork was going to work. And yeah, so I just like we just fully deferred to what he thought, and he was much more right than I was in like results too. So like that's the kind of thing that we're always willing to do, and we've been very happy that we're willing to do that. And yeah, letting people's egos get in the way of like making the right decision is something we try very hard to avoid.
Sure, makes total sense. How do you deal with stress? Imagine you have a really large amount of stress, especially making these kind of short term time decisions. You just you just go for a walk. Do you guys have like a personal massager?
People ask us that all the time. Actually, we do not, but we have had a massage therapists come in like on and off in the past. I mean, yeah, people deal with stress in different ways. I'm pretty good at like, I guess I'm pretty good at not. So like tilting is something that some people are pretty bad at or pretty bad with. Like where like like something like be going badly and it sort of like very drastically negatively impacts their mood. That doesn't really happen to me. I've always played a lot of games to the point where like I'm especially games where the best player wins like 53% of the time, and I'm very comfortable like being confident that even though I lost something, I like that doesn't mean that I was bad at it. It doesn't mean that my decisions going forward will be bad, and I like don't over update on things like that. Um, in terms of like, more generic stress, yeah, like there's some of that. I try to, it used to be much worse during like the years when we had like, like 3 traders covering 24/7. That was kind of brutal, and it was kind of like, it sometimes was hard to like, like do things for yourself to the point where you could deal with stress effectively. We have a much bigger team now to the point where unless like, the market's on fire or something, it like we can be pretty flexible with like, time off and stuff. So I think I deal with stress in a pretty normal way, I guess. Just like, hang out with friends, do hobbies.
I
But
remember one story. I think you told Kobe. What was it? You went and bought a watch or something one time when you're
oh
getting
yeah,
killed.
yeah, yeah. This one, yeah.
Nice.
Yeah, no, that was during the uh, when was that? That must have been like right after March 2020. And yeah, we did not have very many traders. I had been in the office for like several days in a row, and our office was in the same building as a mall. And yeah, I don't really remember this, but I guess I went and bought this watch, and
So,
it made me feel better. So
are there times that you'll just sleep in the office? Like you'll just sleep on your desk, right? There's that like iconic picture of Sam, just on the beanbag, passed out.
yeah, people love talking about the beanbag. I don't like the beanbag so much. I would like I have like a chair that goes back that I like sleeping in, but we also have like mattresses in the office, and like, like there's some like conference rooms that are just converted to bedrooms, which we'll use. One of my worst memories of working here was from, again, March 2020, where I'd been in the office for I think like 48 hours in a row. This was like, on March 12th, when like, the market was like just tanking. And I told people like, okay, I need to sleep. Wake me up if it falls another 20%. And I was woken up like 20 minutes later. It was like the most like I actually was just like, oh my god, this is over, isn't it?
How
Yeah,
close
so
was the market
sleep in the
actually
office.
going to zero on that day?
Yeah, it plausibly could have printed at zero on BitMEX if BitMEX had not gone down. Like the thing going on there was like, so like I mentioned, crypto is very prone to liquidations, especially liquidation cascades. Like the market had fallen, like 50% over the preceding day, and there were like, like hundreds of millions of dollars that were like supposed to get liquidated because like their positions got bankrupt. And yeah, so like you could, the way BitMEX's liquidation engine works, or at least worked then, I'm like 99% sure it works the same way now, is that they wouldn't literally send a market order. They would sort of like have these limit orders, and if they didn't get filled within like X time, they stepped down. And you could just see like all these liquidation orders that were supposed to get filled, like marching down the order book. But like no one had any capital on BitMEX to buy the offers, and they were already much lower than all the other markets. And the limiting factor here is like in order to trade up BitMEX, you have to have Bitcoin collateral, and the Bitcoin blockchain was like very slow that day. And yeah, so like it was to the point where like, yeah, like these orders were going to march down to zero, and they almost certainly would have over like the course of the next hour. But then BitMEX went down. Who knows why? Yeah, it's quite likely it would have printed at zero. I don't think it would have printed at zero anywhere else. It might have like spooked some people and made it go a bit lower, but there was no reason for it to go to zero. Like no organic reason anyway.
How did you guys exactly kind of play that situation? If you don't want to like give the full playbook, then that's fine. But whatever you feel comfortable sharing.
Oh yeah, I mean there was a ton of things going on. We were like, it was an all hands on deck thing, where there was like so much to do that like, yeah, it's impossible to go into all of it. The gist of what we were doing was like all these markets, like all these like markets on like identical products, were trading completely out of whack with each other, because people just didn't have the capital in the right places in order to keep these spreads in line. So there'd be identical spot markets, identical futures markets, like futures spreads with spot, that were trading like 10, 20, 30% apart. And if you could be confident that if you put these trades on, you wouldn't get liquidated, they were just incredible. Like on like marked to 6 hours later. The tricky thing is like some of the positions were involved futures, and you either had to choose between putting the trade on really small, or like levering up even 3x was risky because the markets had in fact just moved 30%, and a 30% move means that you're getting liquidated. So yeah, we were just basically trying to take our finite capital base, figure out where to send it in order to like maximize how much money we were going to make, given that like these things were changing by like the spreads were swinging around by like tens of percents over the course of minutes. And like I mentioned, blockchain times for some of the slower blockchains were just incredibly slow. Exchanges were struggling to process all their deposits and withdrawals. And so you had to be thinking about all these things that you didn't usually have to think about when trying to decide what is the correct use of this money. And like I said, we hit like we have a lot of like our capital base is quite large. We're very lucky in that way, but like it's still finite. We could not do anywhere near all we wanted to do on that day. Yeah, so the gist was trying to find what to do. And also we had a bunch of tech problems. I'm sure most firms had a lot of tech problems on this day. And like we have like various market making relationships that we were trying and failing to completely satisfy. So yeah, there was a ton going on. We were all just trying to think on our feet to the best we could. It was super idiosyncratic. Like none of this was based on our studies that we'd run. This was all very new.
Sure. I want to get into
it. Was fun.
Yeah, I could imagine it was like an adrenaline rush. I do have a final question. I want to ask you something I forgot to ask. What was like your best trade over the last year, if you feel comfortable sharing, that you guys had?
Sure. So yeah, there's a bunch of things that like best is sort of subjective. Something I've talked about a number of times is the decision to buy a bunch of Doge the second Elon Musk started talking about it. Just because that's one of the things where there's so much asymmetry between the upside and the downside, because like the downside was like he stops talking about it and like probably goes down like 20%. The upside was that it like 50x from where it was, because like the real upside is like he encourages it to be like adopted for some reason by like some fraction of like real world users or something, and so yeah, like that, identifying spots like that where you're basically buying a cheap lottery ticket are like quite important if you can do it. And we very much doubled down on that. That went quite well. Let's see. There's a few like I don't know. There's a number of things. Like strictly speaking, I think our best trade was recognizing a similar asymmetry before Bitcoin cracked 20K. It was like sort of obvious that the downside and upside were not the same, because the downside was like, oh, like once it starts getting near 20K, what's the downside? Well, the downside is like it like sort of bounces off for the 10th time, but there's no real reason to expect it to crash a lot. But if it got past 20K, there was a lot of upside potential because of all the liquidations that I mentioned from before. Like it was very unlikely to settle at 22. It was likely going to go to 30 if it got above it, or like obviously it went higher than that, but that's another thing that we made a lot of money on. Yeah, I don't know, there's like other things like this. Like our bread and butter is like sort of not very sexy to talk about. Our bread and butter is like putting on these like spreads that are quite predictably good, and we like sort of just like try and maximize them as much as possible. Probably like our biggest recent thing that has gone quite well is sort of the general our general yield farming business. Yield farming has just exploded in a way that like we were not expecting a priori anyway during DeFi summer. But yeah, like probably like our best like trading decision has been to devote like sometimes half of our trading time and like a ton of our capital to like sort of researching what are the best new yield farms right now, like tracking like both like manually with our traders as well as like building infrastructure to track what are the like how are these yields evolving, like where should our capital be, like spending resources researching like rug risk of these platforms, and yeah, we've made like an astronomical amount of money from doing all this, which has been very cool, and it was not something I was expecting. So yeah, I think that like that's probably our like it's not like it's not like the most like cool thing to talk about or whatever, but it's been a quite good decision that we made.
Sam, I could talk to you for like hours, man, to keep asking you questions, but I want to be respectful of your time. So we'll go ahead and wrap it up. I do have one final question for you though. What's just like some alpha you could give for the audience? And then as well, like kind of off of that question, do you have any favorite books that you'd recommend for the audience to kind of learn more about trading?
Sure. So I'll address the books first. So I don't have a great answer to that, to be honest. I'm not really like a book reader. Like I tend to read more articles than books. But there's the way that the kind of books that have most impacted my trading and like, the way that I think about like, trading problems in general, like the world, have been books that are about poker actually. Poker strategy tends to translate quite nicely to really any field where you're like trying to think in expected value terms, trying to like, like make all your decisions involve like thinking about variance, things like that. And David Slansky is a very good author of poker books. So I've read a number of his books and think they're quite good. Again, it's not specifically about trading, but it's I think it translates quite nicely. In terms of general alpha, let's see. I think that the most important thing, especially this is something that I've learned more, maybe even more recently, is figuring out how to adapt tends to be like super important when you're in like a complicated, like any sort of complicated situation, which crypto trading really is quite a complicated situation for the most part. Like the kinds of things that I'm thinking about and doing now, really don't resemble the kinds of things I was thinking about and doing in 2017 when I first started looking into crypto. Like really not at all, to be honest. Had Alameda not adapted to things like oh, we have to do yield farming now. Like, do we have a competitive advantage in that? Like at the time, like, yeah, it didn't really seem like we had to. Like, it isn't really anything like the kinds of arbs and delta trades that we tend to make. It's like, like it's almost just like reading these numbers and like deciding which one's bigger on some level. Like you can morph into being analogous to our normal trading, but it's not something that like seemed obvious up front. But yeah, learning how to adapt to it like ended up being quite good for us. The same thing happened with NFTs. We really didn't think that we had any edge interacting with NFTs, and I'm not super convinced that we have like a ton of edge in like some aspects of it. But a lot of us had like the initial instinct, myself included, of like, oh, like why should we think about this? It doesn't make any sense for us to think about this. But like, we were like, oh, like what if this is DeFi again? Like what if we're supposed to be thinking about this? And yeah, it's exploded from like, especially where it was 6 months ago or whatever. Like the market caps of these things have like just gone up a lot. And yeah, like being willing to adapt and not being like sort of recognizing biases and like figuring out how to overcome them. Like I knew I was biased against NFTs, sort of just decided to defer to people who I knew weren't for some of these things, and like decide they were right even though I like viscerally thought they were wrong, and they were right. So yeah, this is the kind of thing that I think has been it's like hard to do, but it's something that has gained Alameda and me a lot of value.
Sure. That's an amazing answer. I want to give you an opportunity just real quick to plug your Twitter in or anything else you want to plug.
Oh yeah. My Twitter is it's Alameda Research, or sorry, that's not right. It's Alameda Trabucco. It's Trabucco. I mostly shit post these days about tungsten cubes. So if you're interested in that, then yeah, check it out.
Yeah, but seriously though, be sure to check out Sam's Twitter because he also puts out these really awesome threads from time to time. Everyone is always, whenever there's some kind of big move, everyone's just patiently waiting for Sam to come out with this thread. Like, here's why this was completely obvious. There's always kind of like these memes now. You have people like cloning you on Twitter now. Whenever something happens, they'll be like, here's why this move was blatantly obvious and blah blah blah, basically like trolling. So be sure everybody to check out Sam's Twitter. I mean, he's easily one of the smartest people that I know of, and I learned a lot from him constantly on his Twitter and listening to podcasts of him. So thank you so much, Sam, for coming on. I really appreciate you. I know your time is really valuable, so thanks for giving it to us today. I personally learned a lot. I'm sure the audience will as well. So just thank you so much for coming on.
Yeah, thanks for having me.
Take it easy, man.
Yeah, you too.